Let's start with Venezuela, and we can put up a chart showing just how that production level is coming down dramatically. How bad is it, and is there any end in sight?
It's terrible. It's getting worse. Basically, Maduro is waging economic warfare against his own people, his own country. And it really started like around 2013. It got much worse. They just stopped investing in things like maintaining the electric power system. So it's a country that's in collapse. They don't have power. They can't produce oil. And by the way, they can't even get their water to people in the cities.
And you also had then President Trump on the sidelines for that too, sort of pressing with sanctions. Can President Trump sort of want sanctions on Venezuela and Iran at the same time?
Well, you're now at a really critical juncture because the sanctions on Venezuela are supposed to tighten at the end of this month, and of course Iran next month. And suddenly we have an oil market that's tighter, and Venezuela is going down much faster than people thought.
So I want to turn to Iran in a second, but just first, how long would it take if we turn the spigot, so to speak, in Venezuela? Maduro left, whatever, the sanctions came off, investment came in. How long would it take to bring that production back on?
Well, it depends where you want to bring it back. You could bring it back probably several 100,000 barrels a day or more, given how much it's fallen. But in terms of really having the country recover and get back, that's a thing that would take years because it's been so starved of investment. Equipment has been stolen. And the other thing, the people have left, the talented people have left the country.
Well, also, like, if you're a major, what's your incentive to go in there? I mean, even if you do have some kind of resolution, why as Exxon would you want to take on that kind of risk?
Well, that's true, because if you look at the majors now, you see them coming back and focusing more and more of their investment in the United States, less political risk, more certainty, and there isn't that sense that we need reserves, which you had 10 years ago, where they would go everywhere.
So let's turn to Iran that you raised, actually. We have a chart here that shows the level of production. The United States, under President Trump, said, we're just going to shut it down altogether. And then they started giving waivers. But it still has come down rather dramatically. It's not quite down to the level that it was before. What is the reason for the waivers, and how much are they taking out of the pinch of sanctions on Iran?
Well, the reason for the waivers was partly just what you could get done. I mean, you were not going to I was in India when this was being negotiated, and I remember one of the Indian ministers said, we're not going to zero. And so I think it had to do with their politics, and the same also the concern about, and the president said this, spiking the oil market at that time. And I think some of those factors are still at work. In fact, more at work because India has an election that's beginning at the end of this month. They're worried about prices going up. And so I think it's going to be a continuing negotiation.
And that brings the question sort of how does Saudi deal with it? Because before, the last time we had to deal with waivers, Saudi Arabia kind of got stumped. I mean, they wound up pumping to get ahead of no waivers, and then President Trump surprised everyone and actually gave countries waivers. What is it going to be now for them? Well,
I think the Saudi took a lesson from that because they really heard the president and thought it's going to zero. Let's get it out there. And then prices went down. They also went down, of course, of what was happening to financial markets. So I think the Saudis now, the message they seem to be giving is they're going to follow the market rather than to lead the market, and they're going to wait and see what comes out of this. I think, this administration is going to continue to push for zero exports. The question is, one way they might do it is by saying we want zero exports, commercial exports, by later in this year, and you've got to do more now. But the two big countries to deal with, the two difficulties, are China and India, and then the fact that we see a tightening oil market.
Saudi Arabia made news a few days ago as they went out on their roadshow to raise money in a bond. Exactly. And they sort of opened up their books a little bit, at least. Now, you know that world so well. Was there anything in there that surprised you? Did you know that all already?
Well, I think that they had already signaled about the size of their reserves. I think the cost of their production. I think maybe the most surprising thing was how profitable the company is. That $111 billion, that's a pretty big number.
Yeah, let's just take a moment. $111 billion in net income. That's more profitable than any other company in the entire world. That's serious money.
I mean, it does say that oil still is part of the game.
But what struck me, though, is you make all that money, they can get oil out of the ground for like $2.80 a barrel. Yet if you look at how much cash they actually make per barrel, it's less than Shell and Total's. So what did you learn about the relationship of the Saudi government and Saudi Aramco?
Well, I think that the Saudi government has lowered its take from Saudi Aramco, and this is basically kind of continuing to commercialize the company. It is the central asset of the country, and oil is what still makes that whole economy go round.
So this roadshow had to do with the bond, as I understand it. We're still talking about an IPO on Aramco.
At some point in the future.
One of the things that clearly came out of this information, as I understand it, is, you know what, it still is owned by the kingdom, and we have to take some money out in taxes. And by the way, we'll take more or we'll take less. Was that a surprise at all? And does that limit the value of Aramco shares when they go to market?
I think that was a very important thing, and I suspect it was very heavily discussed about sending a message about certainty to investors that the government won't do what governments often do, is say, well, we want more, let's have a little more, and that they have to send a message about stability as they're going to move forward.
There was also a lot of talk about learning what we did about their largest oil field, Gawthar, and sort of comparing that to the Permian. Everyone thought that's the biggest oil field in the world. It produces the most oil in the world. And now we learned that maybe that's not true. The Permian produces more. Did you get that?
Well, I thought it was quite striking to see how they are managing Gawthar, which is their most important asset, much more prudently and not producing it as fast. And it does actually, what struck me when I was looking at those numbers, Gawthar now is about 3 million barrels, about a third of their production, a little less than a third. That is less than the Permian. I mean, the world's changed. The U.S. now is producing 2 million barrels a day more oil than Saudi Arabia, 1 million barrels a day more than Russia.
But will that continue? Because you hear some noises out of the Permian that maybe people are getting a little more cautious on how much money they're putting into exploration.
Well, I think it's changed. I mean, what you've seen is a change on the attitude of investors to it. It used to be growth at any cost. Now it's growth at what cost? And you see a slowdown, particularly by the independents, because the investors really are saying, we want capital back.
Do you feel like we're going to see more consolidation? Because on the one hand, you have the big guys coming into the Permian. They have a lot of money to throw around, like an Exxon and Chevron. They're not going to care if the oil price moves $10. The private players that can't get capital, they're going to care. What do you see?
I think there will be change. I think because I think the rules of the game have changed, and you have the majors there now saying, you know, both Exxon and Chevron saying 1 million barrels a day out of the Permian, and their focus of capital. It's a different game there, and I think that combined with the pressure on the independents, there will be a pressure to consolidate to get your costs down to be competitive.
Dan, the Permian and the shale in general has really transformed the energy industry, without a doubt. What about geopolitics? Take a step back here for a moment. There was a time not that long ago when the United States in their foreign policy had to be very conscious about oil, particularly in the Middle East. There were things we could not do, things we could not say. How much more power, authority, freedom of movement does the United States have today in geopolitics because specifically of the oil production here?
I think we have more. I don't think it's unlimited. It would be a mistake to think that, which some people think we can, you know, we're free because we're still part of one global market. But I'll tell you, you travel around the world and other parts of the world, they're much more aware than we are here, really, many people here, of what this change means. And when people are saying, oh, the U.S. was losing, you know, was losing its edge and so forth, suddenly you have the U.S. as the world's largest oil and gas producer. So I think it does have a geopolitical significance, and it does give us a flexibility that we didn't have before.
It's fascinating. See, Alex, I can get interested in energy.
He can. He's not making it. This is not even faking it.
And it doesn't stand still. It's always changing.
It's wonderful.
I know.
It's wonderful. I know. She's been telling me this. Okay. Many thanks to Dan Yergin, IHS Markit Vice Chairman.